Hello everybody, this is Toni Turner and welcome to the market now as of about noon Eastern on Friday, February 22nd. U.S. stocks are rising again today on signs of progress in the ongoing trade talks between the United States and China. Top negotiators from two countries haggled over details of a set of agreements aimed at ending their trade war just 1 week before a Washington-imposed deadline for a deal expires and triggers higher U.S. tariffs. And on that note, let's go on and look at three charts that could give us some insight into the week to come. First of all, as we always do, we're going to look at a daily chart of the S&P 500 SPDR, symbol SPY. As you all know, this is the ETF that closely follows our benchmark index, the S&P 500 index. Now, of course, the SPY, if you want to know approximately the price of the index at any moment, you can look at the SPY, just move the decimal point over 1. So, and then you'll know approximately the chart or the price of the S&P 500 index. Now, we all know that since December 24th down here, the SPY fell down to lows of 234 or about 2340 on the S&P 500 itself. Since then, it's rallied in a very, very powerful uptrend. And right now, as I capture this chart, the SPY is trading at $279.12. So that's a significant rebound, and it's up over again the 200-day moving average. That's the black line here, coming in at 274.49. So that is a good thing. What we do need to look at again here, though, is this RSI, this 14-day RSI. Now we see that as the SPY is stretched higher in the past week, and that's great, and again, it's over the 200-day, and that's great, and it is approaching this 280 line, or 2800 on the S&P 500 index. That's a good thing. It is getting very overbought, though, almost over the 70 line on the RSI. Now, as we talked about in the last couple of weeks, index or stock, whatever you're looking at, can continue to go higher, and the RSI can just continue, as we could say, to keep bumping its head on the ceiling on the 70 line on the RSI. But now we're actually getting up a little bit over that 70 line here on the RSI, meaning the SPY is getting even more overbought. If you'll note here on the MACD below, the MACD line, the red line, and the black line are coming together. The red line is no longer over the black line, and that's just a slightly, I'm not going to say negative, but let's just say a slightly come together picture here that says maybe there's a teeny bit weakness coming in. Although, now we have been in a holding pattern for quite some time here, and we've had a very quiet market week this week. Of course, we had Monday off for President's Day. So now the question remains, actually like it was last week, can the SPY move up and over this 280 resistance line and continue in the uptrend it's in? It will have to be one strong dude to do that. Or will, again, same question, will it come back in now and need to just take a little rest here before it keeps going higher? Now, we do know that we do have support here at about 268. We have support at the 200-day moving average at 274, I should have said. We have more support here at 268, and then more support here down at 262. Now, coming together here, that's price support's coming together with the 50-day moving average, the green line, which is coming in at 262.12. So this is forming, at the moment anyway, it's forming kind of a potentially strong support zone for the SPY should it need to come back in a little bit and test these former lows here back at 262. This kind of pattern, in this kind of pattern that we're looking at now, this V-shaped recovery with a trading range just before it, oftentimes, not saying it will this time, but oftentimes results in once again after it streams back up and trends back up, then it many times strives to match that prior consolidation zone again between 262 and 280. So we're in a holding zone again. The RSI is overbought. The MACD is coming together. Definitely in a bull market. Can't argue with that. So it all looks good, but just a little pause here maybe while we look at price resistance and see what happens coming into next week. Now, our next chart here, we are looking again at the iShares Russell 2, and that should have been another 0 there, pardon my typo, at the iShares Russell 2000 ETF, the IWM. Now, as I've told you before, in Tony's Market Club, excuse me, we watch the IWM. This is a small cap. Its excuse me, its underlying index is the Russell 2000 Small Cap Index. Small caps are generally regarded as companies valued at about $300 million to about $2 billion. And the small cap index can act as a leading indicator for the market, meaning whatever way the IWM or the Russell 2000 goes, we can take clues from that as to what might happen next. Now, we do know that the IWM made an all-time closing high back here in August 31st, at $173.02. Of course, along with everything else, the IWM fell dramatically down to lows on December 24th of $125.84. That's about 27% below its all-time August 31st high. Since then, like the rest of the market, it's rebounded in a very strong uptrend, very, very nice here, and just kept on going. Cannot fault anything about this. It's also risen over prior resistance here at about 154, prior resistance here at about 156. And today, as I captured this chart, the IWM was trading at $158.02. Just trying to get over here its 200-day moving average, which is, excuse me, again, coming in at 157.89. So very powerful here. Now, if we look down at the RSI, a real Debbie Downer here, this RSI is, because now the RSI on the IWM chart has risen above the 70 line, not at it, not to it, but above it. And a lot of times we see when like, look left back here on the screen with me at June, the last time the RSI rose up and over the 70 mark or the 70 line on the 14-day RSI, then we did have a few days later, we had a little pullback come down here. Nothing major, just back to the 50-day moving average, but still in all, a little rest stop there. So now we ask, are we in the same kind of position where it actually a bigger premium to the 20-day moving average right now, which is coming in at 151.75. So we'll have to see here. We, again, of course, we have resistance at 158. And we do have some support here coming in at the 20-day moving average at 151 and change. Also more support down here at 140, 144, 145 with these prior lows that came in October and November. So could be the same type of thing where it has to do this. If not, maybe it rises up, flies up over the 200-day moving average and continues to go. What I am going to do is keep an eye on the IWM because its strength or weaknesses could translate into strengths or weaknesses in the broader markets. And now we're going to go on to our final chart. I don't believe we've ever looked at this before. We're looking at a daily chart of the VanEck Vectors Rare Earth Strategic Metals ETF, the REMX. And if you ever have any more questions about any of the VanEck Vectors ETFs, you can go to vaneckvectors.com and find out more information about this one and other ones there. So again, we're looking at the REMX, the Rare Earth Strategic Metals ETF, 20 components in it, 20 holdings I should say, 20 top components, and these are global companies. You may not have heard of them. Top components are China molybdenum, Iluka from out of Australia, China Northern Rare Earth Group, and Tronex Limited. Now, I chose this because most of the sectors I analyzed this morning are very overbought or nearly overbought, and analysts are saying now that about 70% of equities are overbought right now. That means that they're close to hitting ceilings, price ceilings. So I searched different industry groups this morning, and I came up with REMX as a bottom fishing possibility. I often bottom fish when the market is overbought, so if the market pulls back, I don't get caught in a sell-off with stocks or ETFs that fall quickly because of their overbought status. So I often go and try to find something that has not been matching what the market has done, but something that does have strong components in it and the ability to rise, and I did find the REMX today. Now, you can't see it on this chart, but in January of 2018, REMX, I'm going to call it, was trading at about a high of $33. Now, as you can see that here, since then it's been cut in half and touched a low down here of $13.05 on December 28th. Now, however, since that December 28th low, it's rebounded back, held a little handle pattern here. I've always liked these kinds of handles where it makes a two bottom, like little cup with a handle that comes down to support, rises, comes down again. That shows when it rises the second time that there are buyers down here at this price ready to buy, at least at the present moment. From there, REMX has come up over its 20-day moving average, and today the 20-day is trying to cross over the 50-day. That's bullish, and little REMX is trading at $15.52 when I captured this chart. I do see some new volume coming into REMX, and I do see some higher lows here. So I'm wondering here if we actually could have a reversal from the downtrend into a potential uptrend. So again, it's over the 50-day moving average, trading at $15.52. Again, the 20-day starting to cross above the 50-day. And of course, this will have something to do too with news on the China tariffs. I am going to watch it into the coming week, and if it stays positive, I may add shares to my trading portfolio with my initial stop as a close below the 50-day moving average, which is now coming in at $14.71. So if it stays above the 50-day, I'm good with it. If it doesn't, I'm not. If it does continue higher and moves up towards 16 and coming up, there is a gap here. The bottom of this gap is at $15.91. I'll be curious to see if it can fill that gap, and again, if it continues higher, I'll turn my 50-day stop into a trailing stop. So you may want to keep an eye on the REMX in the coming week and see if it can continue its upward momentum in the days and weeks to come. And now on to the coming week's economic reports, but first I want to alert you to an exciting opportunity. Please check out my online trading program, How to Swing Trade Successfully, and we're doing it at a discount right now. In this program, you'll discover the steps I take and the setup I use to make highly profitable swing trades. You'll learn the setup that I use for my own trades, as well as it's the same setup we've used successfully in Toni's Market Club for the past 11 years. This strategy is easy to learn, and you'll discover how to take the biggest profits out of long upswings safely and successfully. So don't miss out. Check out How to Swing Trade Successfully at the link on your screen and get this exciting new online program at the 20% discount we are offering right now. And please know this offer is only good for 2 more days. And now on to this week's economic reports. On Monday, not much going on in the economic front. Tuesday, we have the Case-Shiller Home Price Index, consumer confidence, and new home sales. Wednesday, we have durable orders, pending home sales, and crude inventories. Thursday, we have the Chicago PMI, the GDP, and jobless claims, and not going on much on Friday. Again, don't miss out on this limited time offer to grab our brand new How to Swing Trade Successfully for 20% off. Check out the link below for more information to click on as well. Until next time, keep green on your screen. I'm Toni Turner, and this is The Market Now.